Hi everyone and welcome to the weekly update with me, Richard Perry, market analyst at Handtech Markets. Each week I take you through the key events I believe will be driving your investments in the coming days. Now, moving into this week, we've still got the legacy of this non-farm payroll support that we had last Friday. We had a very strong report, it would seem, with the headlines data bouncing back to 287,000, but the net effect of last month's big downward revision suggested that we're still running at around about 150,000 on an average basis. So there's not really a great deal of sort of need for the Fed to raise rates at any time soon, and also we've got the threat of Brexit coming through the system as well. So the market took this as a dollar strength move, but also a little bit of risk positive as well, because we're seeing the likelihood of a looser or less tight monetary policy due to the fact of Brexit still in the play. So we've seen that move filtering through the markets. We've seen equities pushing higher. Interesting also, we're seeing bond yields remaining around record lows, the 10-year treasury yields at record levels as well. At the same time, the equity markets are pushing higher. The S&P 500, remarkably, is almost at an all-time high. Now, this week, we're still looking out for the Chinese economic data. We've got the trade balance for China, and also we've got the growth data, industrial production, retail sales. So quite a lot of Chinese data which will drive risk appetite, I think, through the week. But I think not only that, we've got one of the other main risk events, which will be the Bank of England monetary policy. Now, what is the Bank of England going to do? Mark Carney sort of possibly going to cut rates. Could happen this week, could happen at the August inflation report meeting, which is next month. It's sort of in the balance as to exactly which way it's going to go, and I think if you do see a rate cut, I think that's going to see sterling lurching further to the downside, but it could certainly be a bit of a sort of will they, won't they event this week, and certainly will take a lot of the headlines, I think, because it could potentially fire the gun on the sort of next round of easing measures that central banks around the world start to take on in Mario Draghi's concerns of a competitive devaluation. So how the Forex markets sort of looking up for this week? Well, the euro dollar started to sort of pull lower once again. That dollar strength that I talked about on Friday is now impacting. It's sort of back below the 110.50 level, sort of looking to now close below that and maybe even below 110 figure. I think that would sort of start to generate the momentum for the downside once again. 109.09 is the Brexit day low that we saw on Eurodollar. For cable, well, the move to the downside seems to be sort of coming through again. Rallies continue to be seen as a chance to sell. 127.96 is so far the low. If that breaks to the downside, where are we looking at? Well, we're looking at probably the low 120s, to be honest, because there's no real support whatsoever. You're at 31-year lows, so what is there to sort of prop up sterling in that environment? Japanese yen had a really weak day on Monday. Interesting that we're seeing this move come as Shinzo Abe and his ruling party or ruling coalition have sort of come out on top in the elections for the upper house in Japan. And so that reasserts his influence and potential for him to drive forward with the three arrows. Maybe that's going to sort of start to weaken the yen. Although on a technical basis, rallies continue to be seen. There's a chance to sell on dollar yen, but it'll be interesting to see how far this little technical rally goes before you see the selling pressure coming back through again. In terms of indices, well, it's interesting again because, as I said, we're seeing it's a bit of a dichotomy, really. We're seeing that the S&P 500 and the FTSE 100 both breaking higher. The DAX is nowhere near breaking out. It's only sort of recovered back to sort of relatively negative sort of levels that has been sort of tracking lower over the last few months, as is the CAC. But as I said, FTSE breaking up to 11-month highs, the S&P 500 12-month highs, but also up towards an all-time high, 2134 again. Incredible move that we're seeing on those markets. In terms of commodities, well, we're seeing the gold price that has started to just come under a little bit of consolidation. Will that turn into selling pressure? Will that turn into a bit of a correction? You've got this strong dollar. Strong dollar generally tends to drag the gold price lower. Will that be the case? You're seeing, as I said, momentum indicators just losing a bit of steam, possibly a near-term correction. I'm still a buyer of gold in the medium to longer term. 1306, that breakout, I think is a great support area to look for sort of longer-term positions. In terms of the oil price, It's another big bit of news there. We've broken down, we've completed a big top pattern on both WTI and Brent crude. We're sort of looking for further corrections, maybe around about the sort of 10% mark is the implied downside target, but the near-term supports come in around sort of 43 on WTI, 43.30 on Brent crude. Interesting that if we see that continued downside and amid the dollar strength and concerns over global growth as well. So for the rest of this week, what are we looking out for? Well, we've got some, as I said, Chinese trade data on Tuesday, but we've also got the Bank of Canada kicking off a couple of central bank meetings this week. The Bank of England is on Thursday, as I said. Will it cut rates sort of in the balance there? You're also looking out for further Chinese economic data with the GDP, the industrial production and retail sales. Certainly that is going to help to drive risk appetite, I think, on Friday, but also the US inflation data and retail sales to end up the week. Inflation is expected just to pick up slightly, nothing too significant. Retail sales sort of a little bit of in line with last month, around about 0.5% on the month-on-month data for ex-autos there. So quite a lot of data actually this week, but still we're focusing on China and the Bank of England. So with that in mind, I wish you good luck in your trading, and I will speak to you again next time. Thank you.